Hello and welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and we are here for Tuesday's daily talk of stock. And what a day it was. Investors ate super healthy today, nothing but green on our plates. As we could see by the heat map here on screen, basically everything was a winner today. Last night, we did have Trump come out and pause the tariffs on China for another 90 days. So there was some fear, uncertainty, and doubt about these tariffs and China. But just like I have been saying all year long, the tariffs are never as bad as many investors expect. So every time there's something coming up like the tariffs, the bears get very loud and everybody acts like it's the end of the world, thinking that all these prices are going to absolutely rip up. But we have seen with the tariffs, it has done nothing but bring in revenue and be a positive for the economy, at least thus far. And a lot of the concerns with the tariffs are around inflation, but we did see the inflation numbers come in today just as about expected by Wall Street. So this was another bullish catalyst today. There was some fear, uncertainty, and doubt finishing yesterday's markets, and it was around these inflation reports, but they came in positive. And just like this article reads right here, the headline: inflation report gives Fed the green light to cut rates. So we do know that the Fed chairman Jerome Powell has been very annoying with his stance on interest rates, not wanting to cut, saying that he is just being data dependent and it's really inflation that he has been looking at all year long. But boom, the inflation numbers came in great, and the Fed right now has a 95% chance for cutting rates next month. This is very significant. This is really what the markets have been looking at all year long. So a lot of the fear, uncertainty, and doubt this year initially kicked off in December of last year when the Fed chairman Jerome Powell said that we would be going from 4 rate cuts to 2. And the markets, knowing that we just had 2 rate cuts this year, have been looking at it all year long. If you don't understand the significance with rate cuts, the reason why it's such a big deal is because it helps with borrowing costs, makes money a bit more stimulative. So it helps the stock market, and it also helps the housing market ease some of the tensions when it comes around the borrowing costs. Super high right now. So interest rates coming down, a positive for the economy. And this is really what investors have been eyeing all year long. So very exciting times that we live in. And with that, we're going to talk about a bunch of exciting stocks that we have been talking about on this channel. We're first going to hop into a favorite, Mr. BigBearAi. It actually had a decent recovery rally today. So we did see a drop off with the earnings, but we did see a nice pop up today. So we're going to get into that. BMNR, Bitmine Immersion, Soundhound AI technology, HIMS and HERS Health, and we're going to finish with Robinhood stock. So if you love to hear me talk, well, there is going to be a lot of that because we're going to be covering all 5 of these stocks. But we're going to start out here with BigBearAi. And then right now, some mixed emotions with Big Bear. We know that yesterday the bear was taken behind the woodshed, and they not only shot him, but they mauled him and then shot him. It was a very, very bloody day in Big Bear yesterday. We dropped by 30%. We were down all the way to $4.80 in the overnight market. And then today, just like I mentioned, we could see in yesterday's video, we did see a bit of a relief rally, and we did tap right back to $6, which is previously the support in the consolidation zone that we were in. So now the support acting as the resistance where it was recently at, and it's going to be very interesting to see where Big Bear goes from here, because I did see some investors yesterday more bullish on the Big Bear, saying how they were buying the dip and how they were investing for the long term in Big Bear. But then I did see other investors who were talking about how they were going to leave this company completely and how they were done with Big Bear. The earnings report was not positive yesterday. The numbers came in very negative. They did miss Wall Street's expectations in terms of revenue, and also their earnings per share was down way from where Wall Street expected. So quarter two was very negative. We're going to get into the negatives, but first the positives, because there was a silver lining with this earnings report, and one of them was truly when it comes to their balance sheet, they do have their strongest balance sheet ever. So this is very bullish. We could see that they had a record ending cash balance of 391 million. And this is significant, not just because of the number, but when we look at that bar graph there, we could see the black and the blue. The blue represents cash, black debt. We could see that Big Bear in its entirety has always been under debt. The debt at one point was neck breaking, $202 million worth of debt and just 13 million cash in 2022. They are in a much better position now. And this is huge because if we're just talking about balance sheets, the companies that can survive longer and do have more opportunities are those companies with cash. Because if you just have a lot of debt and a little of cash, there's not really much you could do there. So that's very positive that they have had a flip and they have more cash than debt for their first ever time. And they also talked about this here, which is very positive, and that is all around the big beautiful bill and how there is a lot of defense spending in that big beautiful bill and how Big Bear could take advantage of this spending. We talked a lot about the big beautiful bill and the increase in spending, and we talked about how Big Bear could take advantage of that. So that was very positive to see that they did mention that in this quarter. And also their customer acquisition has been amazing. They have also became international this year. We know that they now have investments in the UAE and also with Heathrow out in the UK. So they really have expanded. But now when we talk about the negatives, one reason why their quarter did come in so bad and why their guidance still isn't the best for this year, their big Army contract that they got earlier in the year was revised down. So initially they had an expectation, I believe the contract around 166 million, that was revised down. Wall Street again never likes to see revenue go down. So that was very negative. And then also something that could really piss off Wall Street and a lot of big investors is when it came to guidance. They did mention in this earnings call how they are withdrawing their adjusted EBITDA numbers for the rest of the year. If you don't know what EBITDA is, that is just earnings before interest, taxes, and amortization. So a lot of big firms and a lot of big investors, Wall Street, really do look at EBITDA a lot of the times, what really is the earnings behind a company. So they did withdraw this, and overall a lot of investors were also very unhappy with the way this earnings call went, because it was very quick. They did come out with all these bombs, so they really did drop a bomb on investors' heads, and then it was so quick they just said goodbye everybody, no question and answers today. So they just hopped on out of there. And I thought that was very interesting because with investments in the stock market, and many times we will fall in love with the investments that we are in, but that doesn't always mean that the love is reciprocated. So something just to think about with yesterday's earnings report, there is the possibility that because it did come in bad, that Big Bear also wanted to make it even worse by making it just such a quick earnings report. Something funny that I like to talk about is how Henry Ford in mainly 1919 really hurt his stock price, and he even talked about opening a brand new company and destroying Ford brick by brick. So just like this talked about, he talked down his own company as part of a strategy to take more control at a discount. So Henry Ford really did not like investors. He was very, very against the idea of investors, and really he did everything he could, just like the just says to hurt Ford's reputation and indirectly hurt the stock's long-term appeal. And so with Big Bear no longer having that adjusted EBITDA numbers, that does piss off a lot of Wall Street. And we never know, Big Bear may just truthfully hate their investors. This relationship with Big Bear has been very tough, right? So when you look at some of the numbers, they have been ugly. This earnings report was ugly. Guidance has been ugly, but Big Bear still remains at an elevated price of $5.80. And again, this is just my opinion. So I'm not saying that Big Bear absolutely hates investors, but it feels like that. And that isn't out of possibility with what we've seen, like with Henry Ford. And then also a hilarious story. This is Nikola. So this was the EV creator, and years ago, they wanted to prove investors they had a product that was working, but this just always shows who is in the company, and these companies aren't always honest to you, because what they did was they showed a Nikola prototype, a vehicle that was actually in motion, but what they did was they pushed a immobile vehicle down a hill. So they straight up lied to investors, and this was in 2016. And now if you look up Nikola stock, they have delisted. So they aren't even on the markets anymore to invest into. So when we talk about value stocks, you know, this is why it's always important to know what you're investing into, because there are value stocks and then there are growth stocks, and value stocks many times aren't already proven, but we believe in what the company is doing for the long term. So like with Nikola, for example, people were investing into that EV company for what they expected them to become. And well, they fell flat. And that can happen with these small market cap value opportunities oftentimes. So with Big Bear, just know what you are truly investing into. Look at both the possible return on investment you could have in a positive direction, but also a negative direction. Always be aware of your risk with companies like this, because the Big Bear really is unpredictable and they haven't been the nicest to investors thus far. But myself, I am staying bullish on Big Bear because I do think that they are a lot different than Nikola, for example. So there is a lot of real world utility with Big Bear. And how I know that Big Bear is really doing things is, unlike Nikola, where they had to just show in a video a moving vehicle, I've actually seen Big Bear with my own eyes. So they are at the airports. They are also working with the government, and they are becoming international again, going out to the UAE and then also the UK. So there's a lot of utility with Big Bear. They are a real company. They are right in front of us. And I believe in the growth story in Big Bear. That is why I have been investing into Big Bear for the long term. I am very bullish on this right here, that they have more cash than ever. And then also, just again with Big Bear, we have talked a lot about how this company needs to pick up more contracts. And they talked about this in this earnings report with the big, beautiful bill. And so this is very positive to see. And if they do get some revenue from this big, beautiful bill, they do get a big contract. Just one contract could really change everything for the Big Bear. So myself, I am still staying positive on the Big Bear, but just know that this company themselves did say that things could be a little bit rocky for the rest of the year. This is why I always recommend being diversified, because there are tons and tons and tons of opportunities within the market. We never really need to get bogged down by just one opportunity. So myself, I diversify, and this is a company that I have diversification within, and that is Bitmine Immersions. And so if you don't know what Bitmine Immersions is, well, this company is all around crypto mining. So just as the profile reads right here, they are a technology company focused on Bitcoin mining using immersion technology, an advanced cooling technique where computers are submerged in specialized oil circulated to keep units operating at optimal ambient temperature. The company operates in the cryptocurrency mining industry. So they mine Bitcoin and also one other reason why I'm very, very bullish on this company is because one of the chairmans is Tom Lee. And if you know who Tom Lee is, he is a national TV superstar. He is very respected by Wall Street. He has been bullish this entire year. And so he is a chairman on the board here. But this company also doesn't just do mining. They also have a massive reserve around Ethereum. Right now, they have 833,000 tokens. They are the 5th largest company when it comes to crypto reserves, but the #1 company when it comes to Ethereum. And Ethereum right now is boosting up. So Ethereum and the entire cryptocurrency market looking very bullish. Of course, with the rate cuts that we have most likely coming next month. And the company is looking to do more around their crypto reserves. So they're actually looking to expand, and they are offering more shares into the market potentially. So they aim to raise $24.5 billion of stock sales, but this is for a good reason, to buy the largest Ethereum treasury. And so that right here is massive. This company wants to expand their Ethereum holdings, and Ethereum can easily 50% in the next couple years coming up. They are getting closer to 5,000, and 10,000 has been a long-term target for many Ethereum holders. So I do think that is very positive, and I am not always the biggest fan of dilution, but the good thing about this is this will allow them to get more Ethereum. And just like this reads right here, their fundraising initiative has these prices, the shares priced at less than a cent each. So although there will be some dilution, it won't be as bad as if they released these higher, putting pressure on the company. So there will be some more shares possibly in Bitmine Immersion, but they will come into circulation at a very low price. And currently we are sitting at $62. And I think that this is a great opportunity for investors to hop into, because we did see this company soar all the way into the $100 range before it did drop back down. But we are seeing a bullish cross on the MACD, and in general, the markets are looking very, very bullish. So I do believe that Bitmine Immersion will continue to grow. I think Tom Lee is fantastic to have on the board. Just him right there does give a lot of notability to this company. It's always good when you have somebody on your board who is vocal, whether that is the CEO or a chairman, but just somebody who could talk about the company in a bullish sense. And again, this fellow right here, Tom Lee, is very respected on Wall Street and by the investing community. So many investing into this company just because of Tom Lee. But I encourage investors to look at everything that this company really is and how they are the 5th biggest company when it comes to crypto reserves, and how they are the #1 when it comes to Ethereum. So if you're looking to invest into Ethereum, or you want to see some returns from Ethereum, Bitmine Immersion is a great derivative to get yourself in Ethereum, but not have to be in the exact coin of Ethereum. Because although Ethereum is growing, it personally isn't really something I invest into, but I will into Bitmine Immersion. And the reason why I am not betting on Ethereum or not investing into Ethereum is not that I am not bullish on crypto and not bullish on Ethereum. I mean, look at that rip that we have recently had. That is a crazy rip. The reason why I don't invest into it is just because to get to 10,000, it's going to take some time. And so at 4,500, that's a pretty high price for me. I'm really trying to ideally double my money over and over and over again. And so I do think it will take some time for Ethereum to double. But if we're just talking about double opportunity, I think there is a lot more double opportunity with Bitmine Immersion, and that will take advantage of Ethereum. So I love that they are a big Ethereum holder, but also that this company is doing crypto mining. So I am very bullish on Bitmine Immersion. And since the first time I talked about it, which I think was just like last Tuesday, it's already up over 40% from that spot, actually up even more. But insane how much this has grown. And I have added to Bitmine Immersion every single market day since then, kind of FOMO buying into this company because of everything that Bitmine Immersion will do in the future. And just because right now it looks really great on technical analysis. So now we're going to get into our next AI stock, which is Soundhound AI. And the opposite of Big Bear, Soundhound recently had a great earnings. So we could see they had some massive green candlesticks towards the upside. And that is because with their last earnings report, they did come out with great numbers around revenue and guidance for the future. So things are looking very bullish in Soundhound AI. And this is why we initially started covering this company, is because they are a small cap company, but they are growing in each and every single quarter. Things have been getting better. So at the beginning of the year, things were a little down from Q4. This did cause a little bit of bearish sentiment in Soundhound, a little bit of a drop down. But now that we have seen that the earnings have bounced up again, investors are feeling confident for getting into Soundhound. And we are sitting at these crucial levels we have visited before, right in the teen range. So right around like $13 to $18 is a spot that Soundhound has sat at for a long while. So we were there in a consolidation period for some time. Soundhound did draw down, but now they have proved to themselves to Wall Street, and they are right back in this level where they previously consolidated, still under the 52-week high. And I am very bullish on Soundhound. This company, again, does come in with fantastic numbers when it comes to revenue. And if we're talking about a company that has greatly reduced debt and brought up cash, that is Soundhound. They really did work on bringing down a lot of their debt last year. So this company has a strong balance sheet when it comes to what they are earning, and with their debts being low, they still do come in every single quarter with a negative earnings. So they still are fighting profitability, but they are getting closer every single day and every single quarter. So it is fantastic to see that this company is earning more revenue, and they have brought down a lot of their research and development costs. So Soundhound, again, I am very bullish on this company. Everything looks great. I do believe they will continue to grow with the AI movements that we are seeing. So Soundhound AI, a fantastic stock. And if you feel like you have missed out on Soundhound, or you do want to take even greater advantage of Soundhound, there is a double leveraged Soundhound here, SOUX. It moves at double the rate that Soundhound does. So every percent that Soundhound goes up, well, SOUX goes up 2%. I like these opportunities for both like day trading and also for the long term, because with double leveraged, you could think about it in two ways. Say you have $1,000 to put into Soundhound. Well, you could put it into SOUX and make double the percentage, or you could put 500 in, then have 500 for something else, but still make the same returns as 2% is to 1%. So if you are bullish, double leveraged is a great opportunity, and there is double leverage for basically everything. So Soundhound double leveraged, Amazon, Robinhood, a ton of different plays. The only time that double leverage goes against you is when it is towards the downside. So if things do get bearish, double leveraged could hurt you. So just be advised if you do get into that. But myself, I am bullish on Soundhound, and I do believe that the stock will continue to run up. It has had a crazy jump recently, so there could be a little bit of consolidation. We could see a little bit of a dip. If we do see that, though, I do believe that Soundhound will continue to ride in the levels that it is currently at in this consolidation period here, possibly waiting for the next big bounce to be their next quarterly earnings. And so now with that, we're going to get into our next stock. So if you are still watching the video, I appreciate you, because I know this is a long one today, but there's a lot to cover. And so we're going to now cover HIMS and HERS Health, and things have been rough for HIMS and HERS recently. They did have a quarterly earnings that Wall Street did not like, but I still thought thought the earnings was decently positive. And when we just look year over year, there was some growth, but it wasn't as good as quarter one. So it did dip a little bit. And I believe that the stock has been unfairly beat up, just like this talks about, and just like we were talking about earlier, earnings before interest, taxes, depreciation, and amortization, they did have a increase. So they did have an increase. So they surged to 82.2 million this year from just 39 million last year. So they came in and they topped those analyst expectations. And I believe that HIMS and HERS Health will continue to grow. And I think that it is really truly being unfairly beat down at the moment. So when we look at the stock on the technical analysis, we did have these massive rips up, and now we are falling a bit, but this is a positive because we are on a red candlestick on the candlestick chart. And then when we look at the relative strength index and the MACD, we are on the lower levels on those indicators also. And when I invest in the stocks, I always want to invest in the stocks when they are low and take advantage of those opportunities for that recovery. So like with Big Bear, for example, yesterday was a very bloody day, but because I bought Big Bear so early on, I am still up more than 100% on those Big Bear positions, really helping to fight a lot of the volatility that we saw yesterday. So I do believe that HIMS will continue to have a great story going forward. Just like I was talking about the other company, Soundhound, and their double leveraged stock, well, there is also HIMS, HIMZ. So if you've been a little burnt on HIMS and you want to stay in HIMS, if you're still bullish on this company, consider making back some of your money in this double leveraged opportunity. Now, the last stock, which also does have a double leveraged opportunity, Robinhood stock. This company right here is a growth company in and out. So when we were talking about value versus growth, well, Robinhood is the ultimate growth company. I cannot say enough great things about Robinhood. This company has done so much when it comes to innovation. They have the beautiful platform of Robinhood, like the actual trading app, but they are going beyond that. They are doing sports betting. They are becoming true fintech with their banking, and also they have the predictions markets, and they're bringing a lot of these crypto tokens out to the European Union. But this company has fantastic fundamentals. They have a strong balance sheet, a lot of cash, not a lot of debt. This company came in with $1 billion quarterly in 2024 to finish off the year, and we've still had good quarterlies through 2025. And as I have said with each time I talk about Robinhood stock, Robinhood is buying back Robinhood stock. So the company is very bullish on themselves. This is a positive. They are bringing down the overall share amount with every single time that they purchase more of their shares. So Robinhood right now sitting at $114. We have been on this crazy uptrend since April, and I do believe that it will continue. And before we know it, we will see 120 in Robinhood stock. But I would love to hear what everyone else's opinion is in the comments section below. So please let me know if you are bullish on any of these stocks. If you watched the entire video, I know it was a long one, so I appreciate you so much. And in general, I appreciate you guys just for being here every single day. Like we were talking about how some of these companies and some of these CEOs, they may truly hate you. Again, I'm not saying that's happening with Big Bear or any of these companies, but we got to always think about that. That's really prevalent a lot of the times in penny stocks. They really are just trying to screw investors. But I want all of you to know, anyone who comes to this channel, I greatly appreciate you. And I really do have a lot of love for everybody who comes to my videos, everybody who watches, likes, subscribes, and is in the comments section. It really is all of you that motivate me to continue to do this, and I will continue to do this. This is really a dream come true, and we're making it far right now. We are at 2,100 subscribers, so we're getting close to 3,000. We're just 900 away, which is crazy to say because I remember the days when I had less than 100. But you guys are so supportive, so thank you you. Thank you so much. I hope everybody had a great market day out there. Please let me know what you think in the comments section below on if you're invested into these companies or anything else. I always love to hear from you. Also, please leave a like and please subscribe to the channel, and I will see you in the next daily talk of stock.